The stock market is running wild this year. Let's check in with Craig Bolanos, the co-founder of VestGen, as well as a wealth advisor. Craig, investors are feeling a bit shaken by the ups and downs in the stock market this year. What's your sage advice?
Well, I think the sage advice to investors is what we've been coaching everybody at VestGen Wealth Partners, which is expect large amounts of volatility in 2026. And that comes from two obvious places. The first is the history lesson. Everybody knows that the second year of that presidential cycle, that is inclusive of the midterm, has an elevated level of VIX in it. But more recently, more importantly, no one can look past the decision of SCOTUS, the Supreme Court striking down the tariffs. No one can look past everything that was in the State of the Union. No one can look past all of the international tensions that have been boiling up. And no one can look past at the massive amount of disruption that has rotated through various sectors of the market, whether it's the SaaS apocalypse, software as a service stocks, what you've seen in some of the brokers and other things, all courtesy of artificial intelligence. I think, Angela, that's why a lot of investors out there looked in the month of February in the mirror and said, wait a second, I feel like we're in a bear market, even though we're not.
Perfect segue. What advice do you have for us?
Well, I think part number one is now is a great time to understand that a lot of the damage has already been done. And you can take a play out of last year's playbook when we had massive tariff tantrums courtesy of Liberation Day, yet the market climbed a wall of worry. I think there's a very good chance this market is going to continue to climb a wall of worry through 2026, but I don't necessarily see ginormous gains in U.S.-based equities. And for that reason, I want everyone to take stock of the following things. Number one, focus on your geography. There's a reason institutional investors and some retail investors are getting monies onto the other side of the pond. That's about valuation. Number two, pay attention to your capitalization. I recognize the S&P 500 has been the only game in town for so long, but don't dismiss the S&P 400 mid caps and don't dismiss the S&P 600 small caps. Number three on our list, after we look at geography and capitalization, please look and revisit not just cap-weighted indices, but don't be afraid to explore some equal-weighted indices. Everybody knows that technology and communications is the place to be long-term, but near term, I think you're going to continue to see runs in materials, energy, industrial securities, and maybe having more of an equal weight approach in portions of your portfolio might just get you the sector exposure that you need. If you want to learn more about all these emerging thematics, I encourage you to do so. Connect with us online at getretiredstayretired.com. That's getretiredstayretired.com.